build it, build it, build it. Sound money, sound money. Am I making a fool of myself yet?
Yes.
Are we on?
In live.
All right. All right, guys. Hodl, hodl, hodl. Save, save, save. Build it, build it, build it. Sound money. That's Bitcoin in a nutshell, guys. This is what I teach. We hodl and we save and we build. And today, I've got a really special guest. I just cracked his book this morning, and he is a true visionary. He reminds me of me when I was his age, although I had a head of hair when I was his age. And you know what? I made my appearance as ugly old goat, but I'm going to be the real ugly right here. Sorry, guys, you got to see my face. Let me put on a hat. All right, Simon, welcome. I really am looking forward to this. I think we'll have a very meaningful discussion. I don't know if you're familiar, how much you're familiar with my work, but I'm very much. My mentor was E.C. Harwood. I don't know if you know him or who he was. Yeah. Okay, he founded the American Institute for Economic Research, and he inspired me way back in the 1970s when he wrote his description of the lost art of commercial banking. And one of my premises all along has been that, you know, Bitcoin will never become the standard, and without we need to not just have the Bitcoin, the commodity, but we also need to develop banking in it, in that regards. And I just he kind of outlined the description of how the free market put us on the gold standard. And I just found it very fascinating. And basically it was through self-liquidating commercial paper, by creating money that's non-inflationary. And so the money supply, you know, at the time, of course, Milton Friedman was around, and there was the debate between the Keynesians and the monetarists. And then this whole idea, well, you don't need any, the market can determine the money supply. And the bankers actually figured out how to do that in the late 19th century. I was reading your book, and I wanted to go to this one part, and maybe you could just enlighten me, or let's see. Okay, can we share the screen so we can see that? Of course.
It's been a long time since I've looked at the book.
Well, you know, I was amazed because you wrote this way back in 2012. When did you got into Bitcoin?
That was when it was, that was when it was published. So I started that in 2009, around about the same time as before Bitcoin was actually released.
Wow. And so you didn't really know about Bitcoin when you wrote this book, is that correct?
Well, as I wrote the book, a guy called Johnny Bitcoin messaged me on Facebook. And so I was halfway through the book, and he told me about how he'd moved into a squat in London with some of the first developers in Bitcoin. So from that, I started looking into Bitcoin, and this book, Bank to the Future, actually is the world's first published book in the world that included the topic of Bitcoin. So it made its way in, and I went to speak at the very first Bitcoin conference, which was in Prague. And that's where I met the Bitcoin community. It was about 20 to 40 people at the time. It really was a solution to a problem that I was trying to solve at the time around how to build a bank outside of the banking system. So it really captured my attention, and started meeting and investing in some of the early companies then.
Well, I love it, and to see you doing all these things. And I know not all of them work, but that's how the marketplace works. Not everything that we do is going to work, and that's why it is. The marketplace is the great place where we do experiments. And but I wanted to go through. Can we share this one page?
Yeah.
And I haven't, you know, I'm going to apologize. After reading the book, I scanned it. I would highly recommend this. It's very well written, a lot of fun to read. He kind of goes, it's a parody on the movie Back to the Future. And I thought it was very appropriate, the analogies that you made. But what I wanted to talk about was this one area where you call the debt trap paradox, and just see where you're at on that. If you've changed your mind, or it just says either we go into debt or we have a recession. There is no third alternative. And that is why we are taking and I agree with that. With our current banking system, that's true. But I do think there's a third alternative, and I kind of wanted to discuss that with you, and that is self-liquidating commercial paper, because that is creating money, but it's not creating it ex nihilo. What the bank has learned is they learned the art of estimating in other words, money was created, but it was not unbacked. It was created representing production coming into the marketplace. So the creation of money was fully backed, but it was on the gold standard. This is why I kind of laugh at the great debate is Bitcoin a store of value, or is it cash? And I said, well, it's neither. It sucks as a store of value, and it's lousy cash. It's a great speculation, but until we have sound commercial banking, it's not going to be stable. And when gold became the standard, it didn't circulate as coinage or as cash. Banks actually created notes, and the government supplied coinage, which had a seigniorage in it. So it was actually a legitimate way for governments to raise revenue, the difference between the face value and the intrinsic value of that coinage. They actually made the coins out of silver and nickel and copper, but they still were far below the face value of gold. The only ones that really owned the gold were rich people, banks, and governments. Now, if you were poor, you could own gold. You could have it, a $20 gold piece, which is about an ounce of gold, or a small $5, or I think they came as small as $5 gold pieces. But most people didn't do that because the whole economy was indexed to or on the gold standard. So I just wanted to get your thoughts on that. That if you've read E.C. Harwood, and if there maybe is not a third alternative, and that is creating non-inflationary purchasing media on new goods, new production coming into the marketplace.
Yeah, so that choice of either we depress the economy or we go deeper into debt is the only options under the existing financial system. The third alternative, which is also talked about in the book, is that you completely reform the way money is created. So taking a step back, the book talks about there's 3 rules that govern banking, and this really is what brought me to the journey of Bitcoin. And that is that when you deposit your money at a bank, the bank becomes the legal owner of your money.
Yeah.
With Bitcoin, the reason it was so attractive to me is it was a solution to how you can actually own your own money. Because in the second part of it is that because the bank becomes the legal owner of your money, they can actually spend it as they choose, or they can restrict it as they choose. And so really this, and with Bitcoin, you can obviously spend it in a peer-to-peer fashion. And the only way to actually prevent someone from spending that way is to actually use law enforcement if they use it illegally. The third property is obviously the way that the money is actually created. And this is where I had a real axe to grind, which I've been working on for probably 20 years since I started studying economics. And that is that when banks issue a loan, they create new money. Now, in traditional economics, you're taught that a bank is an intermediary between a borrower and lender. Then you get a bit more advanced, and they talk about these things called multiplier effects. And the multiplier effect actually makes an incorrect assumption. And the incorrect assumption, because the multiplier effect just doesn't exist, is that we operate off a system that they called fractional reserve banking. Now, fractional reserve banking doesn't actually exist, but it's an improvement upon believing that the bank is an intermediary between a borrower and lender. The reason it doesn't exist is because there is no fraction and there is no reserve, because over time, the reserve was replaced with the ability to hold reserves in assets that were created as debts, like government bonds in the first place. So you don't even have those reserves, and a fraction of it is not created. So the reality is that since the removal of the gold standard, banks, the money supply is determined by how much banks are willing to lend and the financial innovation that you can use in order to offload the liability of those loans. So we saw that in 2008, where the retail bank would be a conduit for finding as many people that wanted to take on mortgages. Then those mortgages would go to the investment bank. The investment bank would package them up into a product, and then they would sell them to your pension on the buyer side. And so essentially they removed the liability from the person that borrowed that money and transferred it over to your pension. So since investment banking found a way of removing the liability, you just simply had the money supply was determined by the private banking sector as a function of how much debt they could get people, governments, institutions, and corporations into. And then when, in times when they needed to increase that debt, they could use financial engineering. So what's the latest one now is obviously quantitative easing. So you're using the debt capital markets, leveraging the Federal Reserve and the central bank's balance sheet to increase the money supply. But you're doing it all through debt. So with Bitcoin, it was the polar opposite, quantitative tightening, if you like, a fixed money supply. And so that's really attractive. Now, so the rules that govern banks, because all money is created as debt, and that's where I see the key problem. By combining issuing loans with money creation, it created this ginormous, what I call the world's largest regulated Ponzi scheme called fiat money, where you have to find a new market for debt. If you don't find a new market for debt, then every time someone doesn't repay that loan, the money supply contracts because it's the money supply is shrinking, and you go into a recession or a depression, depending on whether they introduce some new financial engineering to increase that debt supply. So what the gold standard is I don't feel it's the full solution, because the gold standard essentially regulates the rate at which retail banks create money. So retail bank, essentially fractional reserve banking, as they call it, is a free market solution to money creation. Coins and cash are government solutions to money creation. You print a $10 note. It costs about 3 cents for the government or the mint to create it. They sell it to a bank for $10. They have $9.97 margin, and that money is transferred to Treasury, and it's called seigniorage income. And it reduces the amount of tax, or it goes to paying debt, whether they're trying to balance their book or not. And as we all know, they're never going to balance their book.
And this is one thing that I've kind of learned. I know I read some fancy book that cost me $100 on seigniorage, and it's the definition of seigniorage has literally changed now. Seigniorage used to be very clearly understood as what I outlined as the difference between the face value of a currency and the coinage. And now they've applied the same principle to just how you've explained it. And I understand the definition. I'm just not going to adopt those terms. Maybe it's because of my age, but I don't consider that seigniorage. I think it's a bastardization of the term, because I think seigniorage is really a legitimate function. And it is a way, a legitimate functions that governments can actually generate revenue without any taxation, and they're actually performing a service and being rewarded for it.
Well, if governments actually benefited from the money creation process, it reduces tax liability, and the process of a gold standard is essentially the gold regulates how much money is created by the private banking sector.
Yeah, I think E.C. Howard kind of termed it as it acts as a governor. It keeps everything under control. And when it starts going too much, the gold brings it back down this way, you know.
Yeah, but
And
my only challenge with the gold standard is because you're still creating money as debt through the banking system. You still always have more debt than money, which is the traditional, you know, you have to create more debt
well,
product.
that didn't happen though
always
until
lose
it was
the gold standard.
nationalized. I mean, once the Federal Reserve was created, I'm kind of going back before that, and where we were at the classical gold standard, where the banks actually did create, they uh, they had their own central clearing houses. If a bank's loans, you know, if they were loaning money to make buggy whips in 1890, very quickly their loans became questionable because the buggy whip market was falling out of bed, and you know, until it completely collapsed. And now I'm sure buggy whips is a specialty that are very expensive to purchase. But back then, a buggy whip loan would have been a very bad loan, and if a bank was too heavily in debt, you know, and had those buggy whips as collateral, their notes would be redeemed almost immediately, which would cut back their reserves.
Mm-hmm, mm-hmm.
And so that was the check, and it was only after we federalized the system that it could be abused, you know, so quickly. And of course, we've had 3 generations of that now. So, but I think we kind of both agree on the history. Let's go into what you see as a vision for the future, because that's what I see as your big contribution. You really do have a vision of what needs to be done, and I agree with you completely that that hodlers, and we need to wake up to this fact. Okay, hodlers need to wake up to the fact that if we're our own bankers, we need to start acting accordingly. And we don't know how to do this. And, you know, you're kind of leading the way in this. And I think that that's a really important thing for hodlers to understand, because, you know, the way I explain it, Bitcoin's difficult to understand. It's not easy. It's not an easy concept. And most people aren't going to get it. But that doesn't mean that they're not on the Bitcoin standard. I mean, we have a factory now. 3 weeks ago, we had 4 people working for us. Now we have 25 people working for us making mass, because all the other factories are shut down. So we have this, you know, I guess it's kind of a black market factory, but, you know, people they're glad that they're employed. They're getting paid every day, and they're getting, you know, they're surviving because I have put myself on the Bitcoin standard. And that this is what the solution to our problems is going to come from the Bitcoin hodlers. And we have to recognize that responsibility. So in a sense, there is, I'll let you develop this farther. Do you understand a little bit of where I'm going with this?
Okay. So yeah, so when I first discovered Bitcoin, I was looking for a solution to a problem, which is that we wanted to build a non-fractional reserve bank. That was the original vision. Once I understood this, we set about building a non-fractional reserve bank, which was the original vision of Bank to the Future. What actually happened once we dug into it is that it turned out you can't actually operate outside of the financial system, no matter what. So we were told that there is no license that allows you to operate outside of it. And even if you get some kind of license, you still have to hold reserves in a federally insured bank and all sorts of stuff. So you know, when we discovered Bitcoin, it was like, wow, we can just build on top of this. And that was about, you know, 10 years ago, whatever it was. And so that was like the original thing, that you can have money that operates outside the system. You can have a fixed money supply. And even with all the innovations, so we were looking at things like peer-to-peer lending and all the different financial technology innovations, they still operate off the traditional banking system, and really, in fact, cause more problems, because if everyone moves to a peer-to-peer system where you're just lending real money, you'd have a contraction in the money supply and a depression in the economy, because you need the debt in order to actually have the money supply when it's operating off the same way.
But can we have collateralized debt, as kind of E.C. Harwood outlined? He says, well, yeah, you create the money, but it's really not ex nihilo. It's not created out of nothing. It's actually created, basically I'm lending to my wife's factory, and I'm, creating the supply of money for her, but it's backed by her production and her equipment. So it's not like it's being created out of nothing. The loans that I've made her are not, they're not just backed, they're redeemable in Bitcoin, but they're also backed with other hard assets. Including,
those are free market solutions. Personally, I believe that you need to separate the process of issuing loans with the process of creating money. I don't think if anyone were to engineer a money system from scratch, they would come up with that solution.
I guess, okay, let's define the term. What I'm saying is there's no money creation so long as the loan is collateralized. Would you agree with that statement or not?
So I
basically,
guess
like self-liquidating commercial paper that's created, but it's, there's a bill of lading or there's a hold on this. It's so that the business can pay their suppliers and their employees and so forth until, they make the sale of their goods, and then that money creation is retired. And that's the process. So part of this is the terminology. I mean, are we really, what Harwood outlined in commercial banking, is that really money creation? It is money creation, but it's not out of nothing. It's not ex nihilo, and it's not, and it's
essentially
it's not inflationary because it is retired. When after that money is created, to pay off the supply, it is retired, and it's non-inflationary. It's not going to create a price rise, but it is a creation of money, but it's a non-inflationary creation of money. What we have now is just, we're pulling the presses, and it is inflationary without a doubt. Everything that we're doing now is.
Yeah, so I mean, there's different theories again of what causes inflation. One of the theories that gets neglected quite a lot is that inflation is also a function of factoring in all the interest, because money is created as debt. So when you have to factor in the cost of all money being created as debt, you need to factor in the cost of the continuing amount of interest in the economy, and therefore that leads to an increase in the general price level as well.
Well, if you look, could it just as easily be looked at it as a discount?
A discount? Explain further.
Well, okay, rather than the so-called interest, what you're really doing is you're creating the money, and of course there's a commission that you're paying to the bank, because they're the ones that are providing the service. But rather than really paying interest, you could say you're getting your money at a discount.
But if in the process of creating that money, you have to pay off the interest plus debt, then you have to have another form of money in order to factor in all that interest, because otherwise you still operate off a scheme where there's more debt than money. And when there's more debt than money, where does the money come to pay off the interest? So you still need an alternative money supply that allows those books to balance. So if you're adding additional interest onto the money creation, it's just why I believe the separation. There's no issue with debt markets. Debt markets are good. They're a very efficient way of reallocating capital. But combining the process of creating money in debt markets creates this inadvertent situation where there's more debt than money, and therefore you have to recycle debt in order to make up for the money that doesn't exist to pay off the debt.
All right. I kind of get it, but I'm not persuaded completely yet. But that's why we're having this discussion.
Yeah, well, it all comes down to the question that needs to be answered is, and I created a video called 6 Types of Money and Who Profits from Them, because it's important for people to understand the different types of money and who actually profits from them. And therefore, from there, you can make an assumption. Now, the really interesting situation that we're in today is that essentially we have completely imploded our financial system. It's not been done yet because we're in the middle of a health crisis. That's going to follow with an economic crisis, which is what we're experiencing right now, which then follows with a financial crisis.
Yeah,
and
I don't know.
because we chucked, go on.
Yeah, I'll interrupt you for a minute because on my little bit of research I've done lately, I did not realize that in January of 1923, France and I think the Netherlands actually invaded Germany because they weren't getting their reparations, and they sent all their armies in there. I think they stayed 5 years. And as a result of that invasion, the Weimar Republic they implemented exactly what we're doing now. They basically, it was a coordination between the government and the private sector. They said, look, these foreign armies have invaded our nation, and they're trying to collect reparations. Do not do anything that's going to help these invaders. And so basically what the government did is says, you go to work, don't produce, and you're going to get paid anyway, and that's what set off. They've been inflating their currency all along since World War I had ended, but that's what set off the hyperinflation in the Weimar Republic. I wasn't aware that France had invaded Germany in 1923, but it's right there in the history books. It just, I said, wow, that's, what's the difference between that and the coronavirus? It's not, again, the coronavirus, okay, it's going to run its course, and we don't know how devastating it's going to be. I don't want to minimize, a pestilence, but far more devastating than the French army invading Germany was the German monetary policy that they followed to deal with it. And that's what, led to their hyperinflation and ultimately, fascism and Adolf Hitler.
Yeah.
So, that's what scares me right now. I mean,
yeah,
you can't go, is it all right if I mention where you live? I think you've mentioned it publicly. So,
yeah, it's pretty hard to keep a secret now.
Okay, because one of the reasons I wanted to have Simon on is one of my dreams in life is to go see the motorcycle. They have a world-class, the motorcycle race of the world is right there in the Isle of Man. They just kind of closed the whole island for these motorcycle races. Can you tell me a little bit about this? What am I going to miss?
Yeah, I mean, every year, everyone from around the world and the whole island turns into a ginormous motorcycle race. It will come back. So it's hugely devastating for the economy here. Like the TT race, so many of the businesses on the island depend upon that event. So it's going to be a very, very hard thing for the cancellation of the.
Well, I was planning on coming. Like I said, I was kind of, my plan was I wanted to go to the Understanding Bitcoin conference in Malta because I need to take myself to a new level. And then following that, I wanted to go stop by the Isle of Man for the race because it was after that conference. But all those plans got shot to hell. So hopefully my health will. It's still one of my dreams. Hopefully I'll come and visit you one of these years during the race.
A little trivia about the Isle of Man. It was actually in 2014. The first time I came here was 2014 when I spoke at it was the first government-run Bitcoin conference in the world.
Really?
And the Isle of Man was the first government to publicly try and put together a supportive environment for Bitcoin businesses. And so the government ran a conference in 2014, and they were really the first movers in this, because prior to that, the Bitcoin industry was like, just this dirty industry for governments that no government wanted to associate themselves with. But the Isle of Man just stuck their head out. So, and they said, look, we'd like to put together effective regulations for Bitcoin companies, and we'd like to support the industry. The interesting thing that came from that, though, was that the government wanted to do that because essentially that's what they did. So behind me is, you probably can see it here, is the PokerStars building. And they essentially, the online gaming industry was kind of like the Bitcoin industry at one stage, where no one really knew what to do with it. It was illegal in some countries, other countries it wasn't. So the Isle of Man came along and put effective regulation for gaming companies. And when the FBI wanted to actually shut down PokerStars, the Isle of Man government stood up to the FBI. And that was actually the chain of events that allowed online gaming to persist. They wanted to do the same thing with the Bitcoin industry, but there was one thing that happened that changed that effect. And that was that the Isle of Man has something called a Manx pound. And the Manx pound is a hybrid currency between the British pound and the Manx pound. So the Isle of Man government print their own paper notes, and they receive seigniorage from printing the Manx pound. If I had my wallet, I'd show you one, but it's a different version of the pound. However, all of the digital pounds are a digital currency created by the Bank of England. And so when I think about money, essentially fiat money is a digital currency because it doesn't exist in physical form. And the banks invented this digital currency. So the digital pound was created by the Bank of England, and the Bank of England contacted the Isle of Man government behind the scenes, not publicly, and basically stated, this is completely off track. And if you support this industry, then we'll remove clearing to your island. And so stable coins were coming about. I do have to disclose, I'm a shareholder in over 100 companies in the industry. So when I talk about companies, feel free to discount it as self-interest. But one of those is Bitfinex, and Bitfinex created the stable coin at the time. So I wanted to put together a proposal for how they could replace the funds from the Bank of England with a stable coin Manx pound, which wasn't a very popular concept at the time, have seigniorage income from paper currency, and then they could get a level of independence where they could actually support industries like, for example, the legalization of marijuana, supporting the Bitcoin industry and putting together a regulatory structure where the exchanges could get access to banking through the Isle of Man banking system. But unfortunately, it was a bit of ahead of its time because even Tether wasn't really too much popularized at that time. But they did make some changes whereby they agreed that you could pay your tax in Bitcoin. Now, nobody paid their tax in Bitcoin, thankfully, because that's like a double whammy of losing your Bitcoin and paying your tax. But Isle of Man has got a deep history, and they never quite recovered from that because, you know, the dependency, and this is where it really ties into countries like EU. You know, the European Union was the free trade and the collaboration between countries was a brilliant initiative. The free flow of you know, immigrants between the nations, but it meant that you had to give up your monetary policy to the European Central Bank. And so, as we're experiencing right now, you know, countries like India right now are heading to the World Bank as their bailout package to stabilize their healthcare system. But in Europe, if you're not big Germany, you have to rely upon the European Central Bank. Now, in the US, at least you've got the Fed. In the UK, at least you've got the Bank of England, and you can control your own policy. But in the Isle of Man, it's actually illegal to take on debt not individuals, governments to take on debt, mandated by law. And so we have to make our balanced book. It's kind of like a gold standard. You know, you have to make your books balance. You have to figure out how you're going to make the money. And the island gets together and we come up with all sorts of initiatives to how we're going to bail out businesses that are in challenging environments right now that otherwise would have been perfectly viable business if it wasn't for this health crisis. So it's really interesting to see these types of experiments at the the macro level on these small islands, and really the dangerous effect that you put your country under when you give yourself the mercy, when you put yourself at the mercy of somebody else's central bank.
On this topic of money and the need for money to have be collateralized or have a reserve, there's people on the internet, some people on the internet are sort of making the claims that because as a response to the coronavirus, there's been a big change in the way that the Federal Reserve works, and that the Trump administration has, they're saying that he's ended the Fed. I'm very skeptical of this claim, but apparently there's been a change of structure where the Treasury is involved in the way that money is issued. Are you aware more or less of what's going on here? I believe there's a couple of platinum coins minted. There's a few $1 trillion that are going to enter the market. Are you aware of any of this?
Yeah, it's quite the contrary. So the Fed is an interesting one because it's different to many other central banks around the world. The Federal Reserve is a cartel of private banks that is not federal organization, and it represents the banks. Now, what's really interesting here is that because the banks, when people stop paying their mortgages or when people stop paying their rental, because when helicopter money comes in and there's a choice between paying your rent or paying or eating, we're going to end up in a scenario where even if you're renting, that's going to lead to default of mortgages, which many banks have obviously passed on that debt onto your pension through non-banking institutions. But many of those banks do have exposure to when money disappears. So what is interesting right now is that you're going to see a really interesting power play. I released a video called The Real Estate Crash and the 10 Things That Come Next Once Real Estate Starts Crashing. That was on my YouTube channel, Simon Dixon. And I talked about these 10 steps that can happen from here. Now, what I think is going to happen, the move that I think is going to come next, is that essentially governments are exercising their influence over central banks. But here's the interesting thing: central banks are not creating this money; they're not printing this money. They're creating this money in order to actually borrow the money from the government. So the government doesn't actually end up, the government's borrowing the money, and the central bank is creating these products. Now, what happened in the case of the Bank of England more recently is that it just took out the debt capital markets, the bond markets from the middle, and the central bank just offered an overdraft to the government. So they didn't even need to create these products in the middle and sell it through the bond market. What we're seeing in the case of the Federal Reserve right now is the Fed has essentially said that because the banks are obviously not going to be lending, so they put the interest rates down to 0 and the banks are putting their interest rates up. The banks are using the margin between the Fed rate and what they're actually charging on their credit cards and mortgages in order to try and recapitalize the bank a little bit more so that they can delay bailout requests or bail-ins. What I think is going to happen next is a couple of financial institutions are going to get themselves in a really sticky situation, exposure to the mortgage markets and the debt markets. And then the Federal Reserve this time, I think, is actually going to say, well, let's let that bank go bust, but let's not let anyone lose their deposit. Now, the deposit insurance scheme doesn't have enough money to cover it. That's another Ponzi scheme. So what are they going to do? I think they're going to say, well, let's let that bank go bust. Let them try and recapitalize by selling off these bad debts, to scalpers that want to buy it in the market. But what we'll do is we'll actually release a central bank digital currency proportionate to the amount of money that bank had that would disappear from the economy. So it's not inflationary money, because essentially you've got all of that money that would have been destructed, that would have disappeared. And then the Federal Reserve is going to create that new central bank digital currency, let the bank go bust, and replace this new debt-free central bank digital currency with all that debt-based money. It's a bit of a mouthful to get your head around, and I've kind of outlined the steps a bit clearer because there's a few steps to that. But if you can imagine helicopter money, I think it's being delivered right now. But if they just simply released an app, you download the app, you get your helicopter money if you enter your social security number. It's a central bank digital currency. And then allowing a bank to go bust, you could then replace that money supply that the bank created with a new central bank digital currency. That currency, I think that's the final and only option that we have from here, and why they're more than willing to implode records and trillions in order to get over this health crisis, because that's the next inevitable game plan. That really emphasizes the importance of Bitcoin, because this central bank digital currency is going to be great for paying your rent, great for paying your mortgage, if you're denominated in US dollars in that case. But you're saving.
Well, they could actually limit the way you can spend that money then too. They could say it can only be used for this.
Exactly. And that's where this is headed right next. So the central bank has now got this new form of money. And by the way, they did this with the greenback in the American Civil War. They needed to fund this war. So the government simply printed a new paper money called the greenback. And that was debt-free money that they injected into the economy to fund the war. They'll do the same here, but this time it will be a digital central bank digital currency. Now that is radical banking reform, because essentially the central bank is waging war on the retail bank in this case. Now, obviously the central bank doesn't want to be into customer service, branches and all that stuff. So they'll open up an API key, and the fintech financial technology companies can build on top of that to create, this is why I think the US was so resistant to projects like Facebook Libra, because they wanted to be the backbone so they control everything. They didn't want to have to do that indirectly through their backdoor to Facebook Libra. And this is why it's such a controversial subject. But that currency, it's going to be horrific. It's going to be the only way you can access your digital wallet is if you have compulsory vaccination, chips implanted so that we can track you, or download the app where all the tracking happens if you don't want to be as extreme as a chip, so that they can, then let's say you do a transaction. You're in America, you do a transaction with someone in China, and you do it in a Zoom call, and you met in Mexico once everything's moving again. You'll then have 3 governments that want to automate that tax collection, and 3 governments that say, actually, you should have paid Chinese tax, you should have paid American tax, you should have paid Mexican tax. And in that dispute process, this will be connected to your passport, and you won't be able to cross the border if you haven't done these things that the government says you have to do, compulsory vaccinations. I'm sorry, this is not a conspiracy theory.
No. You know what? It's not. I agree with you completely. Things are happening at such a rapid pace. I'm kind of in between, because I need to go across the border. Yesterday, it said, yeah, you can do it. It's fine. Today, I'm getting rumors. No, they're going to shut it down at any time. And I don't want to go to the United States and then be stuck, because my family, I live here in Mexico, and I feel safer here than I do than I am in the United States. And yet I do want to do one last little piece of business. Mm-hmm. So and I wrote about this over a year ago. For the last 2 years, the United States, San Ysidro is the largest border crossing in the world. Okay, it's virtually shut down now, unless you're American going in, and they've been if you're got a green card like me, if I'm a resident there, but they're threatening Mexico not letting you in. But the United States already built, before you could just freely go into Mexico, but now the United States has built these guard stations as you leave the country. So they've been thinking about this for years, that they are going to control not only, who's coming in, but if who can leave, and
Yeah,
that's what.
forget the wall. The wall is the currency. You know,
Yeah.
in order to access this currency, you have to download this app. In order to download this app, you have to have tracking software on your phone, and therefore, who needs a wall? We just switch off your money.
Wow.
Amazing.
Yeah.
Hey, Juan had a good question to ask, and maybe this is kind of trivia, but apparently you started out. Okay, yeah, ask the question.
Yeah, so I listened to a podcast that you did maybe, gosh, must have been like 3 years ago. I'm not sure exactly when it was. And I heard you say, my understanding of what you said was that at some point during the creation or after creation of Bank to the Future, you ran into some kind of tension, maybe with some regulatory body or something around the name of the organization, Bank to the Future, which is why you had to get the BNK to the future instead of having the A on the domain name. Am I accurate about that? I think I asked you once already, but you can elaborate on that.
Yeah, so when we originally launched, so Bank to the Future was originally a book, and the book led to us trying to create a non-fractional reserve bank. And then when we created it, we trademarked the name Bank to the Future. And then we tried to create a non-fractional reserve bank. We then actually went to the first Bitcoin conference and realized that Bitcoin was creating the infrastructure to have a financial institution built that operates outside the traditional financial system. We realized that actually our best bet was to actually create a securities business and allow for people to invest in all the companies that were building the industry. Our first investment was BitPay, and then we ended up doing Kraken, Bitstamp, Bitfinex, Shapeshift, and over 100 others around the industry. We created one of the first Bitcoin funds in 2014 with Max Kaiser, who I met at the first Bitcoin conference, and many different things. So, but when we wanted to launch that, in order to have the word bank in your name, you have to actually be a bank. And because we had pivoted to securities, we couldn't use the name Bank to the Future. So one of my ambitions that we always wanted to do is actually, and this is, crisis is a great time to really get back to basic principles. Yeah. And one of the things that we want to do is get back to our basic principles. And we think now that all the technology exists today because we invested in all those companies over, the platforms actually invested over $850 million in funding rounds of companies that built the industry. Because all of that exists now and the technological innovation, we think now is the right time to actually build a crypto bank. So what we're doing is taking all the innovation that the companies that we invested in, that our industry created, and I think we can go right back to our first principles of how to actually create a non-fractional reserve bank, lending products, investment products, and the ability to own your own money, spend your own money, and build it upon those principles. So our goal now is that because the regulatory environment has progressed so much since we started, the final book, as it were, that I wanted to write was The Bank Stole Our A. And I wanted to tell the story about how we got the A back in our name. So once we got the A back, once we get the A back, we still own the domain Bank to the Future and it redirects to us. But now all the technology exists to be able to do this. And at the time, it just didn't exist. There was no way to create a non-fractional reserve bank. So although we are a securities business or an investment platform, we've been using this crisis and this lockdown period to really get back to our roots and return to, can we create that original vision of what we tried to create in the app? And the answer is yes.
Okay, we've been going on for almost an hour. I know we both have to keep this short, but I want to cover, if you can, I want to pick your brain on two other issues. Number one is, what are you saying now? How do we get from point A to point B? I mean, that's what we're both asking. And the second question that I have is, I'm persuaded and convinced that what we need is competition on the standard and not competition for the standard. And so I know you talk about the crypto world, and my view is we can't have a standard as long as we're going to try and be the standard. Once you become the standard, you're not going to be used as cash. Gold was never used as cash once it became a standard. It was used before it became a standard. It was commonly traded, but once it became a standard, it was just held again by the banks, by the governments, rich people. And I was a big believer in the crypto world. I did my little fling in all of the altcoins, and frankly, I did well on it. But right now, it seems like the primary banking is the exchanges. And the problem that we have is they're banking not only in sound money, they do have Bitcoin, but they have all this other garbage too. And I was persuaded initially that, yeah, we need competition for the standard. But then I reread Hayek, and Hayek, his vision never was competing standards. He recognized, and this is what Safe and Amos has done, and who is Plan B, and all these. They were recognized more and more that there's going to be one standard, that a non-government standard, and that's going to be the competition with the fiat. And so we're just shooting ourselves constantly in the foot by this delusion that something's out there better than Bitcoin. The Bitcoin is what it is because what people consider bugs is really its features. That's its strengths. So I want to let you take these ideas that I'm presenting, like how do we get from point A to point B? How do we deal right now? One of the major issues we have is the biggest banks out there are exchanges, and most of them are fundamentally not sound.
Okay. So there's a few parts. There's a few parts to that question. And I'll try and break it down into three. So the first one is, how do we get from, where? So I'll refer to a couple of videos on my YouTube channel, Simon Dixon, in 2011. I created a video called "The Great Depression of 2020s," and that actually outlined how we're going to get to where we are today in a decade, thanks to from the financial crisis. Last year, I also released a video called how Bitcoin it got a lot of pushback because it gave a scenario of how Bitcoin could become a world reserve cryptocurrency in 2020. And it talked about this game of this currency wars, different types of central banks, and how you have Bitcoin could become a tool and a weapon used by central banks in order to win the power play as we, so what is the end play? So that's one of the answers there. The end play, the government want one currency, probably issued by the World Bank, that makes everything digital and probably attacks the dollar. And that will just be one global currency, AI, control of everything, not a conspiracy theory. They already have special drawing rights at the World Bank. That was created. And now that's what the world wants to move to. I don't think we will get there. I think there will be attempts to achieve that, but I still believe that we're going to have a two-tiered system. And the two-tiered system is there a way of making government-created fiat currency sustainable? And yes, there is. And central bank digital currencies will do that. And that is remove all the debt from money creation. And there's a process for doing that. I created a video on the real estate crash to how I think they're going to do that. But that money is going to be the largest infringement upon privacy and human freedom that we have ever experienced in our life, and move our economy to what felt like capitalism and move it to something that looks a lot more like communism via socialism. And so those central bank digital currencies can be totally sustainable. At the moment, allowing banks to create it is, it's not sustainable, but at least they're one step removed from government. When central banks get into the digital currency creation, it's going to be the biggest infringement, but those currencies are going to do something very well. and they're going to give you short-term stability. And I don't mean long-term stability. You just need to look at a chart of the dollar to understand how long-term it loses its value. But in the short term, it still allows you to pay your rent. It still allows you to pay your mortgage. It still allows you to consume goods without volatility. But the real fight is going to be the fight for savings. And the fight for savings is where I think Bitcoin becomes really, really instrumental. And you talked about how the crypto market. When I see the crypto market, I see something slightly different. Having been involved with this from when it was 20 to 40 people in one room, through to altcoins, through to ICOs, through to everything in between, through to, you know, investing in the Ethereum ICO and everything that we saw over those years and were a part of. I think the crypto industry gets things wrong in that they think that Bitcoin competes with Ethereum. That's just a silly concept. There is only one shot at achieving, in my perspective, sound money. And Bitcoin is the world's best shot we have ever seen at achieving sound money.
Yes, I agree with that completely.
Mean that people won't start disrupting capital markets with security tokens built on top of Ethereum, because you don't want the price of ETH to go up in a protocol that digitizes through a blockchain, securities, and all these different products. Now, optimizing for the use case of disruption in capital markets is completely different to optimizing to this fixed supply that can't be changed by anybody. And so what I believe we're seeing is the complete disruption of every single financial product, one step at a time, through a centralized financial technology model and a decentralized blockchain model. And you will see lots of attempts at all of those. You see that in the latest buzz phrase is
the
DeFi.
question is Ethereum truly decentralized?
See, the thing here is that the SEC apparently thinks that it's decentralized enough, right? Like, as far as I understand, there was sort of this SEC official that said that Ethereum wasn't decentralized enough, and so it grandfathered it.
I'm not talking about, look, as far as I'm concerned,
Let's not get too into that, but
the SEC is the third greatest swindle of all time. Sure. Number one is inflation, two is Social Security. Yeah. But so I don't care about the
ugly. We're conflating.
Is Ethereum centralized or decentralized? That's the question. That's the fundamental.
Sure, but forget about the argument of decentralized, centralized. If these products could be built upon Bitcoin, then great. I've tried to build security tokens on Bitcoin. It's useless. I've done it on Ethereum. It kicks ass. That's just the reality of the product. But let's not get confused between whether you even need decentralization for that. What has happened in the crypto industry is we said, look, it started as a mission, and I really miss the old days when it was Bitcoin versus the banks. Those were my favorite days in crypto. Those days are long gone. It's now opportunistic bag holders trying to, criticize Bitcoin so that they can show that their thing, and that really changed the industry a lot. But it's natural, it's competition.
The very phrase "better than Bitcoin" already acknowledges they have to compare themselves to the standard. So Bitcoin is the standard. And so, that's what look, we have to build on this standard and not trying. How is, I hear this over and over again. Well, you can't equate the two. Ethereum's not trying to become the standard, but every altcoin even Richard Hart started out, said, and I praised him for it. He immediately disowned me. What do you call that when they, anyway,
unfollow?
He blocked me because hey, this is an honest shitcoin. He says it's a Ponzi scheme, but then eventually he broke down and said, no, it's really going to be better than Bitcoin. Every altcoin has to come up and to promote themselves. They have to. Well, why should I buy it? Well, because it's better than Bitcoin.
Sure. So yeah, buyer beware of anyone that's trying to create something to compete with Bitcoin. That's just, to me, that's a losing battle.
Oh, I agree with that, but we know that. But there's still all the new money is coming in, And, they can so easily fall victim to this because there is a little bit of a learning curve. And there's even those in the industry, well, yeah, that's what it's for. That's how they learn. We whereas I think, well, we have a little bit of a moral obligation to say, look, forget about, about the chip coins and Bitcoin.
There is so much
That's why
confusion.
I started the whole idea of dollar cost averaging. If we're fundamentally correct, you dollar cost average and you accumulate Bitcoin, and we learn to be responsible in Bitcoin.
I tell you, Ugly, in a day and age when I think so many people need to be onboarded to this industry, I think there's so much confusion in this industry that, there's so many things that can confuse people and curveballs. So I think one of my missions, I think, during this lockdown is to actually kind of just put together some kind of comprehensive guide to what these different things are and how not to confuse them, and getting into this industry, because there are some genuine innovations here. Like stablecoin is a genuine innovation. Bitcoin
I agree. Yeah,
it
is a genuine innovation. I agree with that. It's just, I've never used it, but it's still, it's not as efficient. I haven't bought Bitcoin for years because I did accumulate it and then now I just trade it. But when I, was arbitraging, I would just send wire bank, but I had 5 US bank accounts closed and one in Mexico. I wasn't doing anything illegal. I was just arbitraging Bitcoin around the world, and the banks don't like it, so they shut me down.
Yeah, well, I've had that. I've had multiple bank accounts shut down. Definitely, the house that I'm in right now, I purchased this with Bitcoin, and it took me 9 months to, from the time I decided to acquire the house. I said to the seller, look, this will be the fastest sale you've ever done. I'm a cash buyer. Now, back in the day, being a cash buyer used to mean that you could do a deal fast and get a better deal. Now it means that you're, you've got, it took me 9 months to allow the bank, because he wanted to receive fiat. It took me 9 months to prove that the Bitcoins, I had to select a wallet and prove all the way back. They hired a forensic investigator to go through the blockchain. And I had to go right back to where the original coins were mined, how I accumulated them, and ensure that they didn't go through Silk Road or something in between.
Oh my
and
God.
Prove the source of funds until I could actually do that. Now, the funny thing was, this was, fortunately, this happened. So it was January 2018. Just before, when Bitcoin was around about 20,000 and crashed to 15 in a very quick period of time. And it was stable coins that allowed me to lock in some of that value so that I could guarantee the price that I was paying, and take 9 months to get that money into a bank, whereby the bank was willing to accept it because I could prove that it wasn't the proceeds of crime.
Wow.
We have somehow settled upon a world, and this is why I really fear these currencies and the policies that we're about to implement. Somehow, the way that I picture my money at a bank is that I know that I only need to put enough money in the bank whereby when I call them, I'm lucky if they let me have that money.
Yeah.
And if I tell them, and I have to really tiptoe around and make sure I say the right thing, because if I want to transfer that money and if I say the wrong thing, then I might end up in 9 months of hell around explaining what that money is. And to me, my money at a bank, I don't see it as my money. Just like when I worked in investment banking, I had this pension, and to me, if I ever see anything from that pension, it's like a bonus. To me, if I ever am able to spend my money at a bank, it's like, thank God I was able to do that.
Yeah, I got notified that I've got this pension that I didn't even know I had, but it's not, it's worth $30,000, but I have not been able to figure out how to get it from here to here. I'm trying to transfer it over to, what is it? So I can manage the funds myself. And there's just so much involved in it. It's just hardly even worth doing.
But
So
society has we've reached a stage in society where we have decided that it's okay that our money is not ours and that somebody can tell us how to spend our money. And to me, that's completely unacceptable and destructive towards personal freedoms. But we've just accepted that that's the world we are in today.
well, man, I'm really glad we had this. I've learned a lot from you, and I really admire your vision. I really, really do. I'm excited. I scanned your book today, and I want to encourage you to keep on writing, because you do have a writing style where you can reach the average guy. And some of this is hard. I mean, one of the problems I have, I know Juan said I should ask you about it, but I have, I don't promote, but I also don't disparage Lightning Network. I don't get it. The best that I can see, it's like gold coinage, because my question always is, why is it necessary? And I guess it's necessary in the sense that gold coinage was necessary, to make the gold standard legitimate. But I don't see it again. We have to have sophisticated a banking system based on sound money. And I don't see how that can be done without some type of money creation. And I don't believe in money creation out of nothing, but I do believe in self-liquidating commercial paper, because you say, well, how do you have to pay back this interest or discount, whatever you want to call it, but not really, because you're only creating the money if there is actual new production. In other words, the money can be created, the interest can be paid, because there's actual real wealth being created, and that new money creation is backed by that new wealth. It's fully collateralized. And so
my map of the world is that I believe that every government has the right to create their own currency. And I don't believe they should conflate it with the process of credit creation. I think we should just have transparent money rather than M0, M1, M2, M3, M4, and manipulating interest rates in order to determine how much money a bank actually lends, which conflates the money supply. And you have this web of complexity. We can just have one money supply called M. And if you want to control inflation and deflation, you can increase it and you can decrease it without these complexities. And if the government messes that one up, it's so much easier to detect. And you have competing private currencies and Bitcoin and assets that you can exit into and out to. And if some governments will mess up their currencies and some people won't, but the complexity that they put in the middle is really where a lot of these problems arise.
Well, I emphasize just personal responsibility if you're a hodler. And the way I view, if you go back to the gold standard, back at the turn of the century, 90%, 95% of the people didn't realize they were on the gold standard. That was just the standard, okay? And the people that did understand the standard, they did own gold. Like, again, governments, banks, and the wealthy. You could own gold if you were middle class or even poor, but if you're poor, you probably needed to sell your gold to eat. And this whole idea of, like banking the unbanked, that's just an altruistic nonsense. Most people don't have a bank account for a reason. Most people do live day to day. But so the best that we can do is that if we are hodlers and we're financially responsible, we need to be the leaders, basically, and build our own little economies, and have there's nothing wrong with that. In other words, the more and more that I succeed in Bitcoin, the more I'm able to benefit the local community here. You know, they're putting people to work, and you know, they may not understand Bitcoin, may never heard of it, but basically, you know, they're working and they're eating and they're prospering because, you know, I've adopted this new standard, and it's as much as I've been able to you know, take myself out of the fiat, and you can't. I mean, I'm still 85% in. I mean, you still have to have, you know, like I said, I didn't have the problems that you had buying a house. I can't imagine that problem. But yeah, I mean,
Yeah, I think
that's what we call building. There's again, keep it real simple. You hodl, and then you save. Hodl is you accumulate Bitcoin. You save. That is, you reward yourself for that hodl. And then the third thing you do, which you're an expert at, is you're building. You're constantly building on it. Now you've really been diversified. You've really tried a lot of different things. So I would like to pick your brain to see what's worked the best for you the last since you've been doing this bank of the future. What's been your most successful investment so far?
Crypto exchanges.
Okay.
So, you know, so the highest performing and projects that we've had on Bank to the Future was Kraken produced a 200x in 3 years.
Wow.
We created a Bitcoin fund. A third of the fund was backed by mining, and that got lots of people into Bitcoin at $250. We created an Ethereum mining when Ether was about $1, and that was a very successful investment. Bitfinex, you know, paid all of their 2017 profits out in dividends to all of their shareholders. And we did the hack recovery equity round for them when they had the hack in 2016. Bitstamp was a successful exit. And we've had a lot of things that gone completely wrong in between, and a lot of.
Give us your worst. What's the worst? What's gone the worst for you? Maybe give us your bottom three. That would be good.
I mean, you know, we've probably done about 15 to 20 funding rounds that are bust, and so the worst, in equity, it's zero. So you can't get worse than that, unless you're trading on margin and you end up owing people money. Then, but hopefully they've got risk management controls in that. But you know, this is high risk, high return investing. And you know, there's a lot of speculation. The interesting thing is that in crypto, sometimes logic doesn't work.
I agree. It makes no sense. You cannot. You know, I guess that's probably why I'm a successful trader, as I learned a long time ago. Nothing makes any sense, and you trade. I have no idea where the market is going, is the way I put it, and I trade accordingly, knowing I don't know.
Yeah, so I'm not much of a trader. I used to be a market maker in my on the London Stock Exchange and back in the day, but I haven't traded. I did a bit of trading afterwards and haven't traded since, because it's just you know, I prefer the investing game. I like to invest into a long-term thesis of how you see the world in the next, you know, again, that depends on age, because I started this at a young time. So, you know, I could have a 10, 20, 30 year time frame. And I started with a simple theory that I believe the financial system is unsustainable, and that financial technology is going to be used to disrupt every product one step at a time. And Bitcoin came along and just created this unexpected, beautiful thing that I never thought we would ever see.
Yeah.
Yeah.
I mean, when I first read about it, it was August of 2013. And it definitely wasn't. I mean, I'd heard about it before, but then I read about it, and again, I don't understand the back end, don't pretend to, but I did, learn enough that, hey, I can trust the people that do know and tell me what it's all about.
Well, sure, but I mean,
I understand the economics. I don't understand the tech.
Yeah, I mean, but most people don't understand the tech behind their debit card, right? It doesn't mean you can't use it.
No, absolutely. So.
I mean,
well, man, we have to do this again. I really appreciate getting together with you. Hopefully things will loosen up. I want to come to the motorcycle race one of these years. That's one of my in fact, that'd be a great way to go. Maybe I'll just buy a motorcycle and kill myself on the track. They usually have 2 or 3 people die every year on the course, right? And spectators too. Or I know
yeah, it's normally the racers. So you know,
normally the racers. Yeah,
they know what
well,
they signed.
how many? I mean, these guys. If you haven't watched it, you get on YouTube and watch some of these guys. I think they have a compilation of the guys who get wiped out every year. But basically, there's no speed limit, and there's all kinds of just really, it's the motorcycle race of motorcycle race. It's kind of like down here we have the Baja 1000, which is a race on with you know, the big 4-wheelers. Then they go from Ensenada down to La Paz, which is about 1,000 kilometers or miles, whatever it is, and it's a one-way race, which, you know, over some just really rough terrain. So that's our claim to fame. And they also do motorcycles down here too, but it's off-road motorcycling, which is a kind of, so that's why I want to see the Isle of Man race.
Yeah, it looks like
if I ever die because I wipe out on a motorcycle, that's okay, guys. That's the best way to go.
Yeah, it looks like it's next year because it's closed this year, unfortunately. But
all right.
Yeah. All right. Well,
right.
Yeah. Great conversation. I think we could have done a lot more, but time is time.
Well, you want to keep going? I can keep going. I just know, you know, we all have limited time.
Yeah.
And
we'll save it. We'll save it for a future episode, Ugly.
all right. Well, let me have you do. Here's how I teach Bitcoin, and so you want to join in on me? We'll do a little Bitcoin dance. And
Okay.
It goes like this. You do hodl, 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 save, 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 build a, sound money, sound money. Really stupid, but you know what? Stupid things are the way we learn. And if I can teach through this little stupid dance, that's the easiest thing that I can teach you guys newbie. And when I talk about hodling and saving and building, now Simon may disagree with me, but I believe in Bitcoin alone. I'm going to do it on the Bitcoin standard. Now, that doesn't mean I don't trade Ethereum. I definitely do, particularly since I think it's going to go to zero eventually. So I don't mind being short Ethereum and long Bitcoin. But that, you know, I don't look at Ethereum as being sound money or any of the other altcoins. So there's, in my view, and time will be, you know, you guys will find out 40 years from now. I won't be around. We'll see, you know, just what emerges as sound money. But I think Simon and I both have the same vision. This is exciting times. I have an open invitation. Hey, I'll trade anybody my Bitcoin hodl if they can just make me 40 years younger, because I'd love to be where you're at, Simon. You're living in real exciting times. Hopefully we'll be able to travel the world again very soon.
Yeah, hopefully. But yeah, let's see what happens after the end of this health crisis. But thank God Bitcoin exists, because it would be a scary world without it.
Are you getting shortages there in Isle of Man, or are your supplies pretty well being met?
We're pretty good. Like, so we're a self-sufficient island in terms of farmland and all that type of stuff, but we rely upon imports for more luxury goods. So if shit here really hit the fan, then we just be on organic farmland and pretty self-sufficient.
All right, you'd be eating a lot of potatoes, I guess.
Yeah. Okay, thanks for having me, Ugly.
Yeah, thanks for all the good work you do, Simon. And
all right, I'll see you on the next show. Keep up the education, and there's a lot of things that people need to learn. So
yeah, absolutely. And thanks everybody else for watching, and see you all in the next one.
So long, guys.